Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, we already have an active market here because we had the ADP numbers and they were pretty bad. 145,000 versus 210. So the warning that I was putting out on Monday saying like there's been a change and it does not look good. We are possibly moving into a recession. That trade working out really well so far this week, and we have a sim runner here kind of testing our like swing trading and like managing a long short portfolio. Doing not so bad. Probably should have put more contracts on it, really. So do the charts now. Oh, wait. Music. So to the charts. Here you can see the treasuries taking another move higher, and we are about to pass the banking crisis highs in the treasury market, so that's not good. And the equity market is not taking it quite as hard. Okay, but the equity market just got slaughtered yesterday. Oh man, that was a pretty ugly fall. I mean, all things considered, we're in an okay place, but like, look at this daily chart. Look at those candles on the daily chart. Tell me that does not look bearish to you. I mean, listen, the chart, it doesn't matter, but it looks bearish to me. I'm just saying, right? Oil still managing. I mean, it's been under pressure, but they're still managing to hold their gains. Gold and silver looking just awesome here. Oh man, silver 3% rise yesterday. Big move. Kappa under pressure. So again, we're looking at a flight to safety where global growth is under pressure and a recession. Like just straight up, all of these, it's just all of a sudden here in April now, all of a sudden the numbers are like, oh, actually we are gonna have a recession. Everything that you got from January to March was BS. That's what I see. So let's see here. We start our news squawk. We do have trade balance. Oh no, we just had trade balance. Negative 70.5 versus 68.8. So I want to let this settle a little bit. Oh gosh, I need to go. This little hair here. It's driving me crazy here as I'm talking. I'm gonna go take care of it. Okay, I'll be right back. All right. So, by the way, just remembering, Fed's Mester spoke last night, says that she thinks interest rates need to be higher and doesn't agree with the market that there will be rate cuts this year. So, At least Mester, a little bit in denial. I have to say though, if the services PMI here at 8 o'clock today, 10 o'clock Eastern time, ends up being bad, and then if the jobs numbers ends up being bad, I think that whole narrative falls apart. At that point, it's like, or maybe we even reduce rates in May. Like seriously, could be that fast. I think the situation justifies things switching that fast. ADP employment report confirms labor market weakness in March, reports zero hedge. Following yesterday's ugly jolts data, the employment weakness under the surface in the ISM manufacturing report, expectations were still for just a small slowdown in the job additions in March. However, as jolts in ISM hinted at, the changes are changing fast and ADP printed just 145K, a big miss. As ADP's chief economist Neela Richardson notes, our March payroll data is one of several signals that the economy is slowing. Employers are pulling back from a year of strong hiring and pay growth after a 3-month plateau is inching down. Manufacturing and financial services dominated the job losses, with the southern region seeing major job losses. The miss sequence continues as ADP goal seeks. Pay growth decelerated for both job stayers and job changers. Both for job stayers, year-over-year gains fell 6.9% from 7.2% in February. Pay growth for job changers was 14.2%, down 14.4%. Wage growth in leisure and hospitality remained the highest of all the sectors, but is slowing dramatically. But we do note that women, quote unquote, are why did they put that in quotes? Are seeing wage gains outpace men's in every age group. Finally, as a reminder, it has been the labor market data that has materially supported the strong macro argument among market participants, dominating the weakness in soft survey and industrial data in recent weeks. But the last week has seen reality start to set in on that lagging market data. Is the job market now just lagging the rest of the macro data to the downside, or is it all too smooth and adjusted to be of any use at all? For sure, while Fed speakers continue to talk about the terminal rate above 5% and holding for a while, the market is absolutely not buying it at all, pricing in a year-end rate 100 basis points below the Fed's dot plot. What could prompt the Fed to cut rates 3 times by the end of the year? Recession, banking crisis, both? Well, I don't know if there's a banking crisis out there waiting to happen. Could there be? I mean, I'm not saying that there isn't. I'm just saying I'm not see anything actively at the moment. But the regional banks do seem to be under pressure, and maybe at some point, if we have an extended decline, that could hurt them more, right? Oh, and yeah. Meanwhile, New Zealand hiked 50 basis points. So Fed's Mester actually speaking at the moment. Again, bankers tell policymakers that credit quality is good. What the hell? Andrew Tate is tweeting something about love. Why am I following him? I mean, I followed him because he's a significant figure, but everything that guy tweets, I'm kind of like, okay. How did this guy get so popular? I love all of you. Okay. Oh, thanks, Andrew. Thanks. I don't hate the guy. I'm not into his motivational Twitter posts. That's all it is. That's all it is. I'm looking for the treasuries to give you a pullback here, and it's like they can't get below 15. One does have to wonder though if the market can move much more when ADP happens. And again, oh, I didn't ask this on stream. I asked this in Discord. But here's the key question. Oh, did I say hello to Brando? Good morning. Well, welcome for first. I should make like a special prize for being first or something. No, how low is too low? So like, think about it. If we're at 5% now and they have to reduce interest rates 3 times. So we're back to 3.5. I don't know. I don't think that rates are going to go back to 0. I don't think it's going to go back to 0. The Wall Street Journal asks, could ChatGPT lay waste to millions of professional jobs, including journalists? Not if they figure out their real value. Okay. Too bad it's behind a paywall. I need to get a subscription to the Wall Street Journal, guys. Mester's still speaking, saying that she thinks rates will go a little bit higher. She thinks that they're going to raise in May. She thinks we're all overreacting, I guess. No, I don't think that ChatGPT is going to come for your job. I don't. I think that the places where ChatGPT could have the most impact are places where there's so much work to do. Like, there's always going to be more work to do. And ChatGPT is just going to free people up to doing more valuable work. So it's going to dramatically increase productivity. I don't think, at first at least, that it's going to dramatically reduce jobs. It might hurt your average artist. Those are probably the people that I think right now should be the most concerned. Fedsmester, I hope that we don't tighten until something breaks. Well, then why are you saying what you're saying right now about you think rates are going to go much higher? Really, Loretta? Really? That's her name, right? I got it right. Desk boys and bureaucrats of all shapes and sizes purged by AI. It's the one that, like, I see. Well, I don't know. So like the thing that surprises me about AI is its ability to take in a bunch of pictures of like an anime drawing and then make new ones that look just as good as that. Right. And if you were looking for something that you already had a perfect example of it, and you just needed a little adjustment, you wanted a different pose, a different setting, whatever the deal is, right? That's where these new AIs are really impress me, right? Now, is that the kind of content that people are paying artists for? It seems to me no. Seems to me no. Right. I don't think that your next Nike campaign or something is going to be generated by AI. So I don't know on that front. There are a lot of desk jobs that so here's where I kind of find this a little bit weird, right? Is when I read analyst reports and they're saying these are the jobs that are most at risk by automation, right? And they're like accountants. So that one makes 0 sense to me. Hell, like the whole point of an accountant is you get all of these numbers and they're there to make sure that it was all done correctly. You're gonna rely on an AI to be the one that says that it was done correctly? That seems like risky. That's just asking for people to start doing accounting practices that they've found get around the AI, right? So like, I really think that there's a lot of people that because of their personal and political opinions are like overhyping what is actually going to happen from AI, right? Like when I look at AI and it's like a coding, for instance, right? Where is it useful? Could the AI, right? Like I just wrote like 1,000, I think it's over 1,000 line script now, right? Could Chat GPT write that? No, it wouldn't. I mean, I used it for parts though, right? I said, oh, I need to make an algorithm that does this in Python. What's the best way to do it? You ask ChatGPT, it gives it to you, and then you adapt it, right? That's the sort of things that I see. That's where I'm like, I don't think that it actually replaces as many jobs as people think. And when I look at the analyst reports, they're always like, they're just kind of like eyeballing it, you know? They're like, well, these jobs, they're really quantitative, so those must be the ones that are really automatable. I don't think that accountants are as automatable as these analysts are saying. I really don't. I don't think that mathematicians are as automatable as these guys are saying. I'm very skeptical of the AI's ability to look at the data and identify the problem and do the thing, right? And what's going to happen is you're going to have just as much effort in prompting the AI correctly as you would defining the problem to the engineers and doing it, right? Which is actually like a really big part of the process, right? So like one of the things that I've been doing is mapping out this system that we have. And like every time that I map something out and we're like, oh, okay, so here's this, we can get rid of these or we can modify these or whatever. Every time that we go in and we get one of those points, I'll find a special case and then have to modify my script to deal with that special case, right? So even if the AI was like really, really advanced, I don't think it would have saved me that much time on this particular project. I evaluate AI based on how good their jokes are. I'll tell you another thing. I absolutely despise the way that the content that it makes. It's like if you tell it, okay, write a YouTube video and you know, especially if you tell it like make a more engaging YouTube video or something like that, what it comes out with is so cheesy. I absolutely hate it. I'm like, there is no way that this would. I mean, it gives me some good like guidelines and stuff, but the way that the words that come out just feel so ingenuine. You can't just take what they put what it spits out and put it in a video. So I made this one video, right? It's like the weakest video on the channel of the AI, and it's just like gibberish, right? I'm telling you, the AIs enable massive productivity. I don't think that it's going to eliminate as many jobs as these people are saying it will. I don't believe it one bit. If anything, is just creating new, more accessible jobs. It allows more people to come in and play the role of like a software developer per se, right? At a lower level. It creates jobs. It doesn't, like it's creating a new, slightly lower tier. Maybe there are some people that are like really basic software engineers that weren't very good at it, that they'll just move down into being prompt engineers or something. Okay, well, we're getting some downside here in the treasuries. Pretty decent downside, in fact, I'd say. I don't know if they're going to completely retrace this ADP or not. That would seem, that might be a little too much, but I should also note that volume wise, we've sold about as much as we bought up into the ADP, except for that there was kind of some front running the ADP as well. Okay, but we've sold more than we bought after the ADP. So what do you do about that one? All right. So I am detecting a little bit of a break here. When I say a break, I mean like they're resting. We'll see what they do from here. The way that I got filled on that is not particularly good. Maybe I'm wrong. I mean, they didn't trade that much at 12. There was a little bit that traded at 12. It looks like they're going through it. Looks like they're going through it. Oh, let's talk about this. The message of tax the rich tends to resonate with those that feel disenfranchised. Spoiler, governments don't redistribute wealth. They are certainly good at confiscating wealth, but somehow plans get mixed up just before they actually give it to you. You got played. It's so true. Listen, when has government ever actually resulted government taxing the wealthy and giving it to you, and then it resulted in you going from like poor in the dirt and to like a upper middle class lifestyle? It never happens. It never happens. Because in the end, you still have to be doing something valuable and generating wealth, right? So if one group of people are generating more wealth than everybody else, wouldn't the answer be like understand why they're generating so much wealth, and if it's something detrimental to the rest of society, like stop that from happening in the first place, instead of like taking their money after. You can keep doing it, we'll just take your money afterwards, right? The politicians aren't doing it for you, they're doing it for themselves. They want more they want more programs, they want more money to spend, they want to give more stuff to their buddies. They don't give a crap about you. NATO Stolenberg is speaking right now too, by the way. Wow, that turned back up real quick. Historical poverty rates demonstrate pretty clearly a decline up until the Great Society programs that ultimately stopped the poverty rate fall and maintains around current levels. Well, so I don't know about that one, because that kind of implies that social programs prevented the like that if we had not done anything, that we would have eliminated poverty or something like that, which I don't think would actually happen, right? I think, well, what I'm saying is I think that your data is correct. I just don't like the way that it's presented, because there's a conclusion assumed in there that is not necessarily correct, right? It is true. It is absolutely true that many of the New Deal programs like extended the financial crisis and made things bad. Like FDR would have been viewed as an absolutely dismal, terrible president if it was not for World War II, right? Because his economic policy was really not very effective in the end. It's kind of a funny thing actually to think about, because what caused the Great Depression? Well, it was the central bank didn't want to put money into the systems, so they kept everything tight, right? And then eventually they got Eccles in there. They kind of shifted things around and used Keynesian economics a little bit and everything to put money back into the system and get them out of the Depression, right? But that took a long time. Meanwhile, government is flailing around all over the place, trying every little thing that they could, and like it didn't really matter because the money wasn't going into the system, right? The monetary policy was wrong, so all this other stuff didn't really matter, right? But when you do go into the data, it kind of suggests that the things that the government did weren't very effective, right? I do not feel that the poverty rate would have continued to decline had those policies never been put in place. Because there are certain problems out there creating the poverty rate that we have today, that I just don't think you solve with all of these other things. And in fact, maybe it has gotten worse in our modern day, you know? Like the things driving homelessness is like a really, really good example. The things driving homelessness in major cities. Well, let's not say major cities, okay? Because there are dumb things that guys in like California and Seattle and stuff are doing that are driving additional homelessness that are just really dumb, okay? But like if you look at like even a relatively conservative major city, okay, you get homelessness. Well, there's a reason why there's a certain amount of homelessness, right? There's people that are doing drugs, there are people that have mental issues, and there are people that normally you would have in an asylum, and they're all out on the streets, and that is driving a lot of this homelessness. This is one of the major issues in our society that gets unsung, was that in the 80s they closed the insane asylums, and it was based on a study that was like total nonsense, and of course you don't want to be like committed to an insane asylum and kept in there and all that sort of a thing, but there are people that should not be on the street, right? That should be getting mental help. I don't know if it's mostly drugs and alcohol, but those are the two most major contributors, right? Okay. I don't think that any of those policies would have affected those things, right? You'd have to show me some stats to show me how much of it is actually drugs and alcohol versus mental health. Percentage of homeless on drugs. Percentage of homeless mental problems. Okay, so an estimated 20 to 25% of the homeless population in the United States suffers from serious mental health issues. The research shows that around 1/3 of people who are homeless have problems with alcohol and or drugs. And there's probably some overlap there, right? So I don't think it would be accurate to say it's mostly drugs and alcohol, but it's those two are like the primary contributors, right? Especially for those that are like chronically homeless, right? So yeah. And then there's this other thing that you have to deal with, which is and you can't fix those problems. Well, I would not say that you can't fix those problems. I would say that those are much larger problems than just your what is your current economic policy, right? Like those are problems that go beyond just the economics. You can box them. No. There actually have been in some cities certain programs and things that cities have done that have been shown to be very effective. I can't remember. I haven't gone down this hole in a long time. But when this thing comes up, there are some studies and stuff that suggest that there are actually a lot of things that you can do to help with this problem. But what's going on is especially in liberal areas, some of the policies that they have are very, very detrimental, right? So for instance, in liberal cities, like aiding the drug use clearly doesn't help reduce homelessness, right? So do you think we're in a second? Okay, so when we get into like multiple days, we're kind of talking about different rules. But yes, I think that we are seeing large meta orders being executed long. I think that I think that ADP number is just, it's all related to the same thing. And probably I think these PMIs, these service PMIs are going to be weak too. I think that the jobs number on Friday is going to be weak. Dude, the jobs number on Friday is going to be weird. I'm not sure if I've seen this one before. I think I haven't. I just don't remember it. But can you remember a time when we had the non-farms on Good Friday and they released the number anyways, even though the stock market is closed? Oh no, I do remember one time. I don't know if it was this exact situation, but it was like they released the number and the market moved, and then it immediately after that it went dead. Like nobody traded it after that. Too much empathy. Yeah. And this is going back to, okay, so what about the social program? So like the social program that I see conservatives want to get rid of is the one that I think makes the most sense. I think that you have to have Social Security, man. I don't like the way that Social Security is structured, but I think that you have to have a social retirement program that everybody is forced to contribute to, because most people on their own do not end up saving. And that just seems to be people. And when that happens and the elderly are just left out in the street, that has a very negative impact on society that is quite measurable. And so we are indeed better off with Social Security. But we do need to reform Social Security so that it is sustainable. But it's probably a very bad idea to get rid of that one, right? You're rocking with your trades. That trade was really good, wasn't it? I'm actually a little bit shocked that it's already to plus 30. But you know what? You know what happened there, Mr. M? Is I'm so pissed for not taking it live on Monday. Because if I had taken it live on Monday, man, we would be like freaking up plus 150 or something. They need to stop stealing from Social Security. Yeah, that's another one. I really wonder. So like if the government hadn't taken out of Social Security when it was quote overfunded, where would we be at? Would we still be having a problem at this moment? Right? I kind of suspect that we would. I suspect that the real problem with Social Security has been that the demographics changed and all of the numbers and everything were done for a different set of demographics that didn't happen, right? Well, how much did I get on drawdown? I really did not like the way that I had 8 against me. So I really did not like that. I maybe should have waited, but you know what? If I had waited, I don't think that I would have gotten the 3.315 is maybe where I could have gotten again. Oh, you had 7 ticks against you. 7 ticks on what in the treasury? 7 ticks against you in the treasury is pretty. I don't know if I usually 8 ticks is where I'm like, okay, did something wrong. So while I'm thinking about it, I'm all over the place right now, I feel. But one of the things that I've learned that's really devious is that old retirement homes, like hospice care type retirement homes, have a real problem where you go into the home and then you use all of your savings in the care, and then the care ends up being more expensive than what you have and everything, but they can't kick you out. And so after you die, then they come looking for your assets and things like that, right? So many of these old folks' homes have basically resorted to, okay, if you're going to live here, you have to give us all of your savings, essentially, right? And then if you go in there and like die the next day and don't actually get the care, it's not like the money goes back to the family because it didn't get used or anything. No, it just goes to the home, right? And the care for you to pay for yourself is just like obscenely ridiculous. So what people are doing is they give away all of their money and or put it into a trust. So if you can put it into a trust like 5 years before you go into hospice, I think, then you're safe, right? And then you can go get into a care facility, into a government care facility. How messed up is that? And I really wish I understood the economics of that one a little better, because the cost of care is obscene, right? But I know for a fact that the nurses don't get paid jack squat, right? The nurses, that's a really, really hard job, and they don't get paid hardly anything. Like, that's one of those ones. I mean, maybe I'm just kind of, because my ex, she did nursing for a while. I felt like what she made compared to how, the amount of work that she had to put into it was like retarded, right? It's the same with flight attendant. I think that flight attendants are one of the most exploited workers in the country. It's crazy. But if they actually paid flight attendants what they should, I don't know if the airline industry would work. So what do you do there? Yep, high attrition rate in healthcare. So the question is, where does all that money go? I know that there are some people out there that know the answer to this question and have some really smart ideas for reforms, but every time that I try looking at it, I'm like, where's this? Is just like this black hole. It's like, where's all the money going? Right? Everybody keeps talking about, well, the baby boomers are going to pass on all of their wealth to the millennials, and you're going to have one of the largest wealth transfers in history here now. Not so sure if it's going to work out that way, because a lot of these boomers are going to end up in hospice, and that's just going to eat through everything that they saved. So, like, in the end, who ends up getting screwed the most for never solving the healthcare problem? Boomers. A Fed official, yeah, that was Mester. The market ignored her.
Hmm.
How did we get on this? We were talking about all homelessness. Consumers could save billions by wiping out corporate waste and bureaucracies. So you know what I find really interesting right now is this. So it does not surprise me. I told you guys this story last week, didn't I? So last week I visit LinkedIn every day. I have my little board here. I put it over there because it needs some room on my desk, but I have this little board and it's like all the tasks, and I have like my daily after the stream ends routine where you go get some water, I take my gut medication, I check all of my emails, and I visit LinkedIn. And mostly I'm visiting LinkedIn to try and build more contacts in quantitative finance. And if there are jobs, I'll look at them. And whenever you do that, whenever you like do stuff on LinkedIn, especially if you like add a skill or something like that, it like boosts you in their algorithm. So you get all of these recruiters, sending you messages and stuff like that, right? So I got an email from these guys called Hacker X or something like that, which apparently is like a nationwide thing. And they will set up these events in every city where it's supposed to be like speed dating interviews, right? So I'm like, well, I got sent the email, I guess I go, right? So I go there. I counted. I was like, well, this could be useful information. So let's see what they're doing, right? So there was 60 people there. 60 people there. 3 companies. He had 3 companies. They weren't really very good companies, and they weren't like it's super aggressively hiring or anything like that. So it was really like 60 people going for, talking about maybe three jobs. And I don't think that most of these people were looking for a job per se. Like they were looking to trade up, but they didn't need a job. They weren't unemployed. Okay. But they were looking to trade out. And so what I'm seeing is actually companies have scaled back dramatically on the hiring. That the hiring that they were doing were not things that they needed. And what I'm seeing at the corporate level, when you see them talking about earnings and all of these other things, is that they're cutting out all of the fat. That there is all of this stuff that's going on in corporations, this money being spent that really wasn't doing anything, which really concerns me, because I want to see, like, one of the larger things that I want to see is us get back to like normal, get back to our average amount of GDP growth, and to see the GDP growth outpace the debt growth. That's what we need, right? How do you do that? You have to invest, right? So it's always bothered me when I see companies, they would rather increase their dividend or increase share buybacks rather than invest back into their company, right? But now I'm finding out that all of these companies had all of this fat there to begin with, right? So is it just that they don't know what to do with the money? Because that's sure what it seems like right now. So that they just don't know what to do. Because I don't know, maybe this comes back to this whole thing that like there's some costs to interest rates being low for so long, and like you have to go through the cycle in order to like flush the industry out. It's crazy, but it doesn't really speak well to our chances of like really getting back to really good growth again, does it? So when I went to that thing, I didn't stay. I didn't do any of the interviews. I'm like, this is so dumb. I wasted my time. Why am I here? went home, and I started thinking about it. I was like, you used to be contacted by recruiters on LinkedIn every day, and now it's maybe like once every other week. And the ones that are that I'm having come after me want me to like work in Boston. I had a guy the other day, they're like, you move to Boston. I'm like, well, okay, I'll go for it, but that would be hard to pull. That will be a hard one to pull. Right? They don't invest profits, they increase valuation and use loans. Yep. It's a real, I don't know what you do about this. Well, actually I do. I have mixed feelings about it though. My take is that stock buyback should be banned. It's really good for stocks. Stock buybacks is really good for stocks, but it doesn't seem like it's actually good for investment, and it's like too much of a temptation for companies to do the wrong thing. And we need to make structural changes to incentivize businesses running their business well, right? So like the thing here is that we want businesses to do things to be sustainable, like create sustainable growth. And what a lot of businesses will do is they'll take the short-term thing because that increases their stock price the most at that time, but it doesn't actually lead to the most profits in the long run. They're just taking the short run thing, right? And stock buybacks is one of the strongest mechanisms through which this happens, right? Stock buybacks were not allowed for a really, really long time, right? And you can kind of see where the market has gone since we've had them. I think that we would probably be better off without them. Cream cheese towers. What? Never heard that term before. But that's what I'm saying. Like, well, why shouldn't they be allowed to buy their own stock? Well, I don't know. You shouldn't be able to buy your own stock with debt. But that's not exactly what happens, right? They can take debt and use it for other things and then claim that their profits are what's being used to do the stock buybacks. But like, money is fungible, so that's why it seems to me like the only real solution on that one is you have to ban stock buybacks, right? But there's something about that from a philosophical perspective that kind of rubs me the wrong way at the same time. But like, this goes back to, again, so like, as he's saying, invest back into the company for the people that produce, stop erecting ivory towers and filling them with cream cheese. Okay, but like, where should they actually be putting the money, right? Like where are the areas where the money should be getting invested and it's not? I would love to know, because those are the places where I'd like to put my money. Right? Well, I know one place is nuclear power, but the government has to get out of the way on that one. Depends on the industry. Yeah. It's just so interesting to think about for me, because the takeaway at the end of the day is markets are not perfectly efficient. Everybody acts like the market is perfectly efficient, but it's not. And we're just looking at that from a market perspective. right? Or financial instruments. Okay, financial instruments aren't perfectly efficient. But it seems to me that like the job market, which is premised on a completely different set of microstructure and fundamentals, but it doesn't seem to me like the jobs market is very efficient either. Had to invent new identity groups and industry to manage interacting with them in the workplace. Well, that sounds to me like you're just jumping into that's the thing that's on your mind. It's not directly relevant to what we're talking about. Right? Like the whole thing is that a lot of the top companies, okay, like a Goldman Sachs, for instance, always had this stuff. You got to understand, they always had this stuff at Goldman. And in all seriousness, I think that their pursuit of those principles was a major factor behind a lot of their success that they had like 30 years ago. It really was. Okay. Because they were able to draw on such a diverse set of perspectives, right? The problem is that can work when like a few elites are doing it, but like when it turns into every company wants to do that, then it kind of doesn't work. You can do that without pissing billions of dollars in HR departments. Yeah, and I don't think that they were that back then. And now it is like in some of these tech companies, it's a job. Yeah. One really does wonder. One really has to wonder how much the expertise in that area is actually benefiting people. Yeah. So we're back to 15.5. When we pushed higher there, I was a little bit surprised by how far it went. So, but my plan here has been to try and hold this through the services PMI. So. I don't know if it works that way, Uzi. A warehouse worker makes less money so that someone in the building can make $1,200 a year to have meetings and emails. I don't think that that's how the job market actually works, though. I don't think that they go in and they say like, okay, we have X amount of money to spend on employment, and we just spent a ton of money on this guy, so we can't spend money on this guy. I think that it has a lot more to do with like their particular job market. As they go and they say, okay, we want to have this role. What is it worth in the market? And then they go and they pay it, right? So if you want to fix those kinds of problems, you have to talk about why is that particular role undervalued in the job market, right? So like flight attendants, for instance, right? Well, if they're paying them like absolute crap and you're still able to fill all of the positions, then I guess maybe that says that job just isn't worth that much. But if workers had better organization tools, don't get me wrong, the way the unions used to work like in the 70s was just awful. Okay. But that doesn't mean that there can't be things that labor should be able to do to kind of like help with their value, right? That could help there, for instance. That kind of labor market is not sustainable in the long term. Well, so again, it comes down. So like, I think a lot of it comes down to like, okay, so if you're going to get this job that's like this HR position, right? You probably need a college graduate that graduated from business school, right? If you just put that one, because most people, even today, most people don't actually go to college, believe it or not. So that makes a big difference, right? And then they had to spend a certain amount to go to school, so they have to expect a certain amount back out of their job, right? So they're not going to be willing to go into the job and they might have a couple of different places that they can go, right? Now let's compare that to or we're talking about like a warehouse worker, for instance. Okay. So is there skilled labor involved in it? I don't think so. I think that you could probably take just about any guy and train him to do that job within a week, right? And when you have that guy and he's been working in that place for a long time, does that give him bargaining power? It doesn't, does it? Right? He could go and work at any other warehouse, but like there's not like this huge competition for his skills where it's like I can go and I can get like a way better job at this other place, so they're gonna have to compete to pay for me. It's not like that. There's the competition isn't there, right? So if you want those people down at the bottom to be paid more, it's either going to be the company making a conscious decision to do it, which is basically charity. You basically charity work, or you're going to have to change like the dynamics of that system. Man, we are getting some really, really strong steepening here this morning. The 30-year is really lagging. I kind of wish that I had taken this trade in the 2-year. If I had taken this trade in the 2-year, I would be like way up. I'd be dealing with this awful spread, but I would be way up. So like if you come in and you have the labor unions involved in it, right? Then that kind of gives those people that don't have a whole lot of bargaining power, levels them up a little bit, right? On the same token, pay for like the top executives has gone up like way faster than everybody else's, right? Is the productivity increases that we're getting out of them really justify what they're getting paid? Doesn't seem like it to me. So why are they getting paid that much? Well, it does seem to me like a lot of the money that's made in corporate America these days come from the decisions that those people make. But maybe that's because where the money is being made has more to do with, all of this financial nonsense that they're doing rather than making the product, right? So that's probably part of it. And then the other part of it is that regular people don't own stocks. So it's just like all of their rich hedge fund buddies that are in control of the company. And so they can pay the CEO whatever they want. And it's, how are you going to fight against that? It's really hard to do that as like a shareholder and stuff, right? So do you see what I mean? These are problems that are kind of like natural to the structure of the job market. And if you want to change them, you're probably going to have to change the job market itself, right? Because what I'm hearing is, well, the reason that this all got screwed up is because people have this attitude or that attitude, right? They started valuing this diversity, inclusion, not stuff, valuing that too much, or this, that, and the other. And I'm saying all of those things are kind of natural consequences of a market that is structured in a way that's out of whack, right? What do you mean by the 30-year lagging? So if I recenter everything, the 30-year is about 6 ticks from the low of the day, whereas the 10-year is kind of more in the middle of its range for the session, right? So if I hadn't recentered things, you would see that the 5-year moved up more than the 10-year did and the 30-year did, right? So they're buying the 5 and they're selling the 30. And because my instrument over here is more sensitive to the 30-year, it's coming back, right? So if I had done this in the 2-year at like say 3.7, right, I would still be up $30. So I have to basically sit through the pullback. It's not, the 30 years not leading. You might see it that way, but I would say you're wrong. Oh dear, I hate it when the jigsaw, my little profit and loss thing, sometimes it gets screwed up on jigsaw. Oops, that's not what I wanted. No. So, I always thought that the rest follows the 30. Not quite. It's a little bit more complicated than that. You might see oftentimes that they will tick and the 30-year does it first, right? But there is a spread, right? It's either going to be a steepener or a flattener, which means if it's steepening, they're buying the 5 and selling the 30. If they're flattening, they're selling the 5 and buying the 30, right? So this way, it's this way versus this way, right? So we can look at our charts over here to see which way it's been going this morning. Which way has it been going this morning? Well, let's look at the knob spread. It's this way, right? So what does that mean? They are buying the 10. They're buying the 10 and they're selling the 30, right? So then I come back over here to my DOM. What am I going to see? It's going to be like that. You see this? The 5 is up 3 ticks. The 10 is only up 2 ticks, right? Steepening. Yeah, I do know. I know. I'm teaching you something really, really important if you can trade the treasuries, right? Something really, really important. Okay. So what does that mean? If I buy the 5-year, I would be up 3 ticks. If I bought the 30-year, I would be up 1 tick. Right? Now, because of the way that these instruments are structured, you make a lot more per tick over here in the 30 years. So maybe it actually kind of like all evens out, right? Okay. But when you look at the interest rates, then you get a different picture. Then you really see it, right? Look at it right now. This one actually reset, right? But my 10-year, look, my 10-year is about $5 to $10 more than the 30-year is. And the 30-year would maybe actually be more like 3.577 if it had as much liquidity, right? So what I'm saying is, if I take a long and we're steepening, then it's a little bit more difficult to manage that position in the 10-year than it is in the 2-year, right? But I do it in the 10-year because they have the most liquidity. If there was enough liquidity, I would probably have done it in the 2-year, right? And that one little difference I mean, it's like on the micros, it's like $5, but it makes it a lot easier to manage a position, right? What happens if they keep raising interest rates despite the market pricing in rate cuts? Oh man, then the market would get surprised by it and have to revert back, and it would be really ugly, right? I mean, we've already seen that happen, right? That's what happened over, let's see here, let's come back to a daily chart. Right. This whole thing right here, right? This whole thing right here was like, oh, okay, the Federal Reserve is almost done. The Federal Reserve is going to pivot. They might even reduce interest rates. You know, the economy is getting kind of rough. Actually not. And then they slowly give it up as it becomes more and more clear. And it was like that up until the point at which there was the banking crisis, right? It's kind of funny to think back on, because there are some people that are long from all the way back here and held on the whole time. There are some funds that back in November said we're going to have a recession in the first half of the year. Right. Okay, so I looked away and something happened. What is this? Okay, so it looks like some major, I think that this might have reset, so let's reset them again. But it looks like some major flattening came back in. So that steepener went too far and it's reverting back. And that's kind of putting the treasuries more back into the middle of the range. Oh, they came back quick though, didn't they? Yeah, it was at 19 at one point. So they are moving around pretty quickly here. Now that's a little curious. That was right on the open though. That was right on the S&P 500 open. And so far the volume on the open appears to be a buy. And the main thing that we're looking for is the PMIs, right? So anyways, it seems to me like a corporate America doesn't necessarily know how to effectively spend its and invest its money right now, and I find that greatly concerning. So, by the way, when we came up here, there was some pretty aggressive stacking. Yeah, it was a 900 lot. There was a 2,500 lot at 16.5 at one point. Yeah, at 16.5 they added 2,500, but then they pulled it. Oh, that's interesting. We kind of saw this behavior at around this same time even as well. The past 2 days, haven't we? Can you believe it seems like it shouldn't be Wednesday? You know what? I think that my perspective is all screwed up because I ran out of my gut medication, and so my body is probably a little bit. I didn't sleep very well last night and feel a little bit like down, like I'm in limbo. I don't know what I'm supposed to be doing. I feel like I'm just floating here. That tends to happen to me when my body is going into like hibernation mode because it thinks that my gut is under attack. So it seems to me like it should be Thursday or Friday, and it's only Wednesday. You know what else? Also, it snowed so much outside, and that's like I've been inside this whole time. Okay, so see this one? Now you really see it really clearly, right? steepener. So they reverted a little bit and then they steepened back out, right? And so what does that mean? For me, in my position in the micros, it means that I'm getting 20 bucks instead of 30 bucks on my winner, right? If I was on the right side of the curve, if I was on the shorter end of the curve instead of the longer end of the curve, because the 10 really is kind of the longer end of the curve, the 10 and the 30, okay? But if I was in the 2 or the 5, I would probably be making $5 to $10 more. Okay, well, this stacking, by the way, the liquidity above us isn't terrible. This looks to me like somebody has coming in and is executing some sort of a large meta order, and it's probably a buy. And I'm wondering if it's the same as what they've been doing ahead of all of the other news this week, that they think they know what the services PMI is going to be and they're buying ahead of it. Because they're adding the liquidity at every step it goes up. So that doesn't mean that they can't push back down through here, but it probably means that there is a large person has come in and is executing something, and they're probably buying. I say probably because since the move that we got that we originally took on this trade, the delta has been kind of a little bit back and forth and iffy. So I can't really tell if they're really actually buying a lot or not. Oh, what's this? Nick Timmerhouse. More than 40% of money market fund assets are being invested in the Fed's reverse repo facility, which is a concern for some in the banking industry as banks face pressure on deposits. To reverse the giant sucking of the overnight reverse repo facility, all the Fed needs to do is lower the interest rate it pays, said Bill Nelson, chief economist at the Bank Policy Institute and Industrial Trade Group. Brian Zach, a former New York Fed executive, said lowering the reverse repo rate wouldn't be appropriate. RRP has provided highly effective control of overnight interest rates. I don't think the Fed should be trying to force savers into bank deposits by making the alternatives less attractive. Okay, well. That interesting note from Nick Timmerhouse that I think is a little bit beyond me. Octavia says step up buyers in the 5. But even like, look over here. So yeah, they are buying it more in the 5 as we would expect because the spread is going up. But are we seeing that much of a change in delta? Not really. So this kind of looks like the market maker is able to shift the market around quite a bit and create a lot of volatility, but that it's not, that we're not actually necessarily seeing strong volume come into the market. But that's not the full picture, because then we come over here and there's all of this aggressive stacking and stuff. So like there are some signs that somebody's doing something. Okay, well, they traded at 17.5 and 17, and they were both spoofs. So that's a concern. Okay. Interesting. There was an iceberg 1800 at 17, but they were able to push through it. Twitter's changing blue checkmark policy sparks confusion. I don't know what's confusing about it. You either paid for it or you didn't. How do you tell it's spoofs? Because they had 2,200 on the bid, but then when it actually cleared, I only saw 600 trade. So that's why I call it that's why I called it a spoof, because the liquidity wasn't actually there. It pulled. Right? What do you mean, but they reloaded? This is the first upper column in iceberg. Well, so right now you're seeing some iceberg. So like right here, that's where you're going to see the iceberg, right? If this number is larger than what's actually on offer, right? So like the most that this was ever on offer was like 1,600, and we've traded 2,229, right? Then I say that's an iceberg, right? It might not necessarily be an iceberg. It might just be multiple people adding contracts there as it goes through, but that's the key thing that we're noting, is that there's, right? It took quite a bit more to sell through that. Okay. But this one, when it traded through it, of course you can't see it now because this column is reset. But when we did it before, there was 2,700 at 17.5, and it went down, and it only took 300 contracts to move down, which means that that order pulled, right? Okay, so this is interesting. So the ISM services is like the big number, right? But we get S&P 500 services, and the market is thinning out for it. Oh, I should clear that. There we go. Okay, this is going to be interesting. Okay, so it is lower than forecast. 52.6 versus 53.8, and then the composite is 52.3 versus 53.3. And remember, that was last month's number. Okay, but they're moving back up here. I'm not seeing all of the liquidity return quite yet, but definitely driven by the 5-year that time, though. So in 15 minutes here, I'm hoping we keep these areas that we stay above 16, but when that 8 o'clock news comes along, and if that, especially if it were to be, well, okay, so they're expecting 54.4. If they were below 50, that would be like a blowout, like, oh my gosh, sort of a thing. I don't know if we're going to get that low. It's probably going to be more like 52, right? But they're expecting it to be, okay, ISM was 55 the month before. They're expecting it to be 54.4. Yeah, liquidity is still not there. And like, look, they're trading through 16 on nothing. So the market makers are just getting out of the way. And whoever those big guys were that were kind of doing stuff before the news don't seem to be there anymore. Not ideal for the long, right? What it would have been ideal is they came back in, and when those orders got hit, they reloaded and they iceberged, and then they were like, oh, he's still there, and it shot back up, right? Okay, so there's the first one. There was a 1,000 added at 17. And then 1,100 traded through it. So that might have been that guy getting filled. I don't know. Now we're really gaming it out, right? So when I get this deep into the flow, that's not necessarily like we're paying attention to all of these things, but it doesn't necessarily predict what's going to happen, right? But it's kind of context and flavor so that we can kind of interpret what happens after this, right? At the moment, I'm kind of leaning towards that they were just spoofing, and that's why we're getting this ugly downside action here. So now the 30-year is almost at its lows, right? So this is interesting because so this is another spot where the spread is kind of telling you something, right? So the spread is saying like that they're imminently raising or lowering rates, essentially, right? When it steepens back out. So like it gets flatter and flatter and flatter and flatter, and then the recession comes and things steepen back out immediately when the Fed starts aggressively reducing rates, okay? Now what you will tend to see is when we're steepening, the treasuries are buying and rates are going down, right? And vice versa. So if rates raise and the treasuries sell, but the curve still steepens, right? Then that is perhaps an indication that this is just like a natural pullback because the guys in the spread didn't give up, right? Does look though like there's been a little bit of stop run. Well, I was really hoping that I would be able to go into this ISM with like 20 ticks in the bank, but this is all making me very nervous. Overall, it's a breakout move, so well, not necessarily, right? So I think the issue that we have right now is that like we did have some upside movement and there was some real reason for it. I think that a lot of those guys took profits, and like what are the orders going to be for the next 10 minutes? Probably you're not going to see a whole lot because they're going to wait for the news, right? Then after the news, then hopefully it's lower than expected and we get bumped up, right? I might not want to hold through that though. So it puts us in a difficult situation, right? And we had this setup here where they were stacking and everything. That's like a positive sign, but their ability to trade through that without those orders holding is not good, right? It kind of suggests that the whole thing was just manipulation and not actually a large meta order coming in and buying it. Or maybe they did, maybe there was a large meta order, they did come in and buy it, but they don't want to buy anymore because they're done and they're just waiting for the news to come out now. We'll see. I have to say though, the 30-year got crushed pretty hard there, right? Look at the difference between them. See, if I had done this the way that I do over here in the treasuries, I would have baked in probably 30 or 40 bucks, and then I could just have one contract on writing. That would have been a lot more comfortable. Well, I tell you what, here's another thing. I'm expecting the ISM services PMI to be lower than the forecast of 54.4. If it ended up being higher than forecast, that would really throw this market into all sorts of chaos. Because then it would really be like stagflation, right? Nvidia slips as Japanese chip making export controls slated to take effect. Oh. Okay, ECB's Lane is going to be speaking. Oh, at the top of the hour, that's right. I want to keep yapping and talking, but I'm nervous and don't know what to say. So we just gotta wait for the news. I guess now is a good time to stand up and stretch a little bit. Oh man, I needed that. Like every bone in my back popped. Okay, so interesting. And while I did that, we ticked up 2 ticks and you're getting the stacks again. A little bit lower than where they were before, because the stacks before were more in the 16 area, but still nervous. There could be somebody still buying a large meta order here today, but I'd say that if there is, they're awfully clever. I am seeing a little bit of a turn to the upside in cumulative delta though. So that's the first really major signal we've had since for the last 30 minutes. First major change in cumulative delta we've had in 30 minutes. Minute 30. Okay, there's a little bit of a stack at 16. And they mostly pulled. Okay, all of the orders pulled there a minute ahead. Jeez. This is a little bit larger of a risk than I'm used to taking here, guys. And Mama 51 spot 2. Hell yeah. Look at that. Look at all of that volume that's puked out into those highs too. Wow. Okay, so it wasn't below 50. I said probably we're not going to get below 50, but that's still like a huge miss, right? Congrats. Well, I don't think the trade's over yet. I think I hold it to Friday actually. That's what I think I'm going to try and do. There's probably going to be some big backwash on this too, right? Well, there's already a lot of backwash on it. That feels good because that was like so nerve-wracking, man. That's one of the most nerve-wracking. It's not the first time I've held through news and stuff like that. I would say it's not even the biggest jump I've caught from holding through news, but it was certainly one of the most nerve-wracking for me. Okay, so I want to pull up Forex Factory here real quick. Okay, so there was a month in January. Okay, so remember that they kind of like they will make methodology changes and stuff like that. So we did get a bad number. Why is it not telling? Oh, there you go. We got 49.6 in January because of like the methodology change. So that's like more of a seasonal adjustment sort of a thing. Okay. And we have had bigger misses. So for instance, in March of 2022, we were expecting 61.2 and we got 56.5. Okay. During COVID, we had one where we wanted 41 and we got 37. Or no. That actually was, that was not as bad as I expected, is what that one was. So I wouldn't say that it's like one of the biggest misses ever, but within the context and everything, it does not look very good, does it? Right? Forex Factory worked this time with refresh rate. Well, so did I show you what it looks like on Financial Juice? So here's what I get on Financial Juice, right? And these numbers just update on their own. I can hear the news squawk over here. And then if I click, so like for the EIA oil inventories, if I click this little bell icon, I can come in and I can say, okay, give me a buy alert if it's greater than this and sell if it's less than this, right? And then it'll make a sound for me too, to tell me which way to buy. It'll say like buy or sell. So you can be fast too. Okay, so I should note that the 5-year, so now this spread is actually like really working in my favor. The 5-year moved way more. Don't get me wrong, like it steepened, but then the 5-year also pulled back more, and so the 30-year is staying at its highs while the 5-year is pulled back considerably, and so that's really working in my favor. I feel like I'm a salesperson for Financial Juice now when I'm pulling that up, but I tell you what, was that uptick in the cumulative delta front running? It very well could have been. I'm going to go, I mean, we can't prove it for sure because there could be other things that would cause that to happen, but given the context, I'd say it's pretty safe to say that there was somebody buying this whole time, probably. And the thing is that we've seen this one has not been as strong as the ones that we saw on Monday and Tuesday, but we have seen this sort of behavior ahead of all of these big numbers as it's pushed the treasuries higher. So one might even argue that it's been the same person. Oh man, live action, that sucks. Got stopped, ran out a minute, and got nipped out of the spike. Wow. Okay, so by the way, what's the dollar doing? Oh, the dollar got creamed on that. So this dollar treasury dynamic is kind of interesting. So when you have a flight to safety, typically you will see people buy treasuries and you'll see the dollar bid as well, right? But in this situation, because it's looking like the US economy is a lot weaker than the European economy, the Europeans are still talking about raising interest rates very aggressively, while the US markets are like, oh, the Fed is probably going to have to flip here, right? So if European banks are offering higher interest rates than the United States, then the money goes over to Europe, right? And so that's where you're getting this. Well, look, the move in the dollar is almost completely reversed. The treasuries have maintained their gains. Let's see where this goes. Because this could turn into the flight to safety. Everybody buys the dollar and the treasuries. But just the way that it moved off of that initial news, that's the dynamic that I think is going on. And that could be nasty. I don't think I've ever seen a bear market crisis sort of a situation where they sold the dollar. I don't know what that looks like. And it kind of scares me a little bit thinking about it. My fault trading size and being in the, yeah. Well, it was unusually volatile ahead of all of that and everything too, wasn't it? By the way, they did trade some size at 26, but they were able to get through it. It looks like that the dollar reversion hampered them. So the issue we face now is like, how much does it pull back? Does it make sense to hold through it? I mean, if I want to hold through non-farms and everything. then maybe it does. But for the short-term trade, maybe I should have gotten out at 50. Like at a profit of 50. Well, it's still volatile. they just slipped up 3 ticks all at once. And there was one of them was 1,800 contracts that they cleared too. So, man. That's all the talk in China. I say it's ever since I've been involved in markets, the whisper has always been the dollar's going to get weak. The dollar's going to lose its reserve currency status. But I must say that chatter has become particularly strong the past few months because they're like the Saudis are doing business with China. To me, it's kind of like, well, if they're going to sell oil to China, why not do it in Chinese currencies? I don't think that anybody's going to sit there being like, well, we need to have a ton of yuan in reserve just in case. And, you know, all of these sorts of things. If something goes wrong, I need to go and buy the yuan. Like, that's not going to happen. I really don't see the yuan replacing the dollar as the reserve currency, because it is America's institutions and stability and so forth that makes the dollar the reserve currency. Okay, but we do appear to be moving into a world where there are other currencies that matter, even though they're not the reserve currency, right? And so because of that, people are talking about it, and the people on the TikToks and the social media are just like, you know, hair on fire about it. If at all, it'll take another. Yeah, it would take a long time. But and the other thing that you got to remember about China, we always forget because they're competition and everything. But like, China is facing like true demographic collapse, right? Because it's not just that like there are not enough people to support the older generation and that sort of a thing. It's like, and then after that, the kids right now, like the 30-year-olds, are just like straight up not having kids at all. And so their population is literally dropping off a cliff, and that's going to hurt them economically. Do the primary dealers have to buy treasuries in US dollars because that is the main collateral in the over-the-counter? Yeah, so if you go to buy them at auction, you're paying with dollars. And I've never heard of such a thing as like buying a treasury with euros. Don't think that happens. Japan buying oil from Russia is something to note as well. Okay. So here's why I don't think that one's as big of a deal as everybody is making that one out to be. It is to note. It is worth noting. Okay. But some people are presenting this as, okay, like countries are now losing, like they're not going along with the coalition, etc., etc., etc. That's not quite what happened, right? Japan applied for and received an exemption. There's like rules under which they can, certain circumstances they can get exemptions and stuff like that, and they got an exemption, right? So that's why I would say it's not quite what everybody thought it was from the headline. I am new to order flow. What's the best way to learn this? I have a video series about order flow. You watch that video series, and then you need to watch the flows a lot, because your brain is a neural network, and you've got to train yourself to see the things that you see in there. And you got to look at more than just the order book. You've got to be paying attention to the news and understand all of the context around it to understand why those flows are coming in. And then you see the flow, you see the news, you see the flows come in, and you see how it affects the market, right? And that's how you learn. It's the hardest way to learn. It's the hardest way to trade, but there's some real benefits to it. because then you get into these situations where if you know that a flow is coming in, you know exactly how it's going to play out, like to a T. Okay, well, so there are some large orders down in here. We've kind of come back to like the breakout zone, and I'm seeing like some absorption up in here. So far, I think we're still okay. I would prefer to be up here, but it's okay. By the way, how big of a jump was that? 15K? Okay. That's a reasonably sized move. I mean, that's in terms of the amount of volume that it did, that's a reasonably sized move. The liquidity was really light, so it really moved the market though, right? Thanks. That's what I'm here for. That's what I'm here for. I've been thinking about it more and more and more. Like, because like what is your ultimate goal here? Well, I have a couple of goals. Part of it is I want to trade and I want to have friends to trade with, and so I think that's kind of how it really started, to be honest with you. But and there's this other side, which is I want people to understand the market better, and I want more retail traders to be successful, because I believe that if more retail traders are able to be successful, that it will help us overall. Because the market is kind of skewed towards the institutions a little bit, and to our detriment. And so if we can work together and overcome those challenges, it's to our benefit. That's the other side of it. But then there's also this larger societal level thing, which is like, if people understand this stuff and they make better financial decisions in their lives, that's a good thing for us, right? Well, what I've learned though is that like education doesn't work. Like if you take a person and you teach them everything about financial markets and managing your own wealth and retirement accounts and all of these sorts of things, that they don't change their behaviors at all. They don't adjust what their living expenses are. They don't contribute more to their 401k or open an IRA or any of those things, right? They don't. And studies show this. So what I've discovered this week is that there's many studies that prove this is true. So if you want to make those noticeable changes in people's lives, how do you do it? Well, my theory is that the reason it doesn't make an impact is because you're talking about choices that don't happen every day, right? So you're teaching them something, and then maybe they end up having to use it like 5 years down the line. And by that point, they might not even remember. They might not even realize that it's a significant financial choice for them. And they might not remember the stuff that you taught them. They're just going to go in on their usual habits and do what they tend to do. And so you don't get the change, right? So how do you get a change? I think that you have to be involved in it every day. So that doesn't mean that you have to be, dumping thousands of dollars into the stock market. But if you can come in here and watch the treasuries and just risk or make or lose $10 to $50 a day, right? You can do that for a long time. It's very, very minimal risk. Maybe you get lucky. Or even if you just go in and you watch the stream and you're listening to me, or you follow me on TikTok and you see when I put notes out, or you're regularly reading CNBC, Zero Hedge, Bloomberg, Wall Street Journal, whatever it is, right? And now it's something that you're interacting with every day. Then when that opportunity comes, you're going to remember, because you've been preparing for it for like months and months and months. You spent hours and hours and hours thinking about this thing that you're going to be chomping at the bit to make the correct decision, right? So that's what we're doing. And I think that order flow plays into this in a unique way, because order flow really requires you to sit and get that screen time. Like I can explain to you the empirical properties of order flow, I can explain to you how it works and everything and the sorts of things that we tend to see. But in terms of like your brain actively seeing it and understanding what's going on underneath of the scenes, like brain connections have to be made in order to do that. So you have to watch it. And then once you've made those brain connections, and especially when you understand the market microstructure and you're applying, when you're watching these flows, you're also thinking about, okay, what does this mean about the market microstructure and the flows that are coming in, and why does this flow come in, right? Oh, okay, because the PMIs were really bad and they think that there's going to be a recession. So you're seeing flows buying into the treasury, right? That sort of thinking, I think it rewires your brain in a way that will allow you to make other financial decisions in your life a lot more effectively. Yeah. And now that I've thought that through and it's like explicit in my mind, I hope that I can help more people with that, to help them understand that, like, look, the point of this isn't to come in and become a millionaire from day trading, because that's extremely unlikely. In fact, it's extremely unlikely that you're able to like replace your income with day trading. Okay. So then why do it? Well, because it's going to make all of these other positive changes in your life, and you're going to understand the markets. You're going to be able to make much more effective decisions. And the place where you're going to see this is like, you put the money into your retirement, you make good decisions with buying a house, you make good decisions with your job, and that's going to result in hundreds of thousands, if not millions of dollars over the course of your life, because you were able to make those better decisions, right? So I hope that, what is the word? I hope that speaks to you and motivates you to learn more about financial markets. Still a little stuck at 25, but the 30-year is... This is all really interesting because it seems like... So there was a really big spike. Like, there was a really, really big spike when the news came out. Okay, really big spike in steepening of the yield curve, and that steepening has almost completely flattened back out, and now we're even flattening a little bit. So well, we caught a good winner, but this range that we have up here is so wide. I'm not used to being in a position that moves that much, man. It makes me nervous. My friend's father was a plumber and made millions trading on the side, and his house is worth, wow. But day trading? This is crazy. I mean, listen, it's not like it doesn't happen, right? But you just got to understand that, like, okay, first of all, there's the probability that you become successful with it, right? And then there is, how much money do you actually make if you are successful, right? Well, if you're starting from nothing, okay, if you were a large hedge fund and you made 30% per year, that would be like, that's like blowout performance, okay? Now with margin, you can get a lot more than that, but that also kind of increases your chances of blowing up, right? So you kind of end up in this thing where it's like you have a 1% chance of being a millionaire and a 99% chance of losing everything that you put into it, essentially, right? Versus you're coming in and you're just taking small little things, right? Then best case scenario, you make a couple tens of thousands of dollars from it, right? Average scenario, you break even, and then maybe 30% of it, you lose a little bit, right? But then you make all of these other decisions in your life that you make more money from, and makes up for it, right? With day trading, it is myopic. So how can you get a directional bias unless you are scalping out order flow? Well, the way that I determine my directional bias is based on the flows that I'm expecting for that day, right? And if I don't have something that I believe is going to significantly impact what the flows for that day are, then that's when I just sit here and yap, right? Like when I don't have a directional bias, right? So today I have a directional bias. It's buying the treasuries because I anticipate that further weakening economic data is going to drive more buying treasuries, right? Well, news events is one of the best things that you're going to get, but you could also one of the things that's driving the flows could also be they need to do end of month rebalancing, and based on analyst reports, they're going to have to buy treasuries, right? That would be another flow that you might be able to anticipate. So I have to make that distinction because the typical retail trader thinks of it as like fundamentals and technicals, and they hear me say that and they go, oh, that means that Seth says use fundamentals to determine what your flows are. That's not it. But you need to use predictors of order flow, and whether they're technical or fundamental or what, it doesn't matter. What matters is it effective at predicting the future orders during that time frame, right? And it can come from a number of sources. But news is always one of the most common and most powerful. Okay, well, they broke down through that. So this is the area where they pulled back, and they've made it a little bit lower here. I haven't heard anything from ECB's lane. We are going to get oil inventories here. I wonder what we're going to get here with the euro. There was a spike in this spike here in the dollar pushed the treasuries down, so with the dollar kind of pointing that way, that the treasuries are kind of threatening to retrace some of this, right? I'm still nervous because this is the one, the way that this has played out for me in the past sometimes is like I got the winner, and if I had just taken it off like immediately off after the news, it would have been amazing, but then I'm trying to swing it and it comes all the way back. I feel really good about this setup though. I just don't know about what it's going to do between now and Friday. Why to hold until Friday and not longer? I guess I could do longer. I don't really like holding over the weekend though. But depending on how it goes on Friday, we could hold it a little bit longer. Especially, well, so then you would kind of have to start looking at what are the things that we might have that we'll have to work with in terms of flows over the next few weeks, right? Is what I'm thinking. And so if I come over here into next week, right? Well, we got CPI and PPI. We don't have estimates for those yet, but I would expect those to be a little bit weaker. Would it be, like core CPI was spot 5, and maybe the estimates come in at spot 3, spot 4, which is about where I would expect them. So that one might not necessarily move us a whole lot, right? So, core retail sales, that one will matter. If that's a negative number, that's gonna hurt. But So and then another side is how much is actually going to come through. So like if I come from a daily chart and I'm just looking at this and, you know, we've already had this move right here. It's like, how much further can it go before those flows kind of have to moderate, right? So I can see some real potential for that Friday, but after that, not so much. That's why I'm likely to take the profits on Friday after the news. If that's how things end up going. But with all that said, we should note that kind of like swinging it for multiple days is still a relatively new thing. And I think there's still a lot of kinks to work out, especially from the practical from it. Because what happened to me the last few of these that I've done is like I have it and I'm like, oh, this is so great. But then I look at what's ahead of me and I don't really like it and I don't want to hold through these other risk events. And so I get out of it and then I miss some of the biggest part of the move, right? Or I just puss out and don't take the trade. So, you know, I should have been in this from Monday. So I'm glad that I had the wherewithal to come in and do it today and make a little bit from it. I wish that I was up 50 instead of 25, but hey, what you gonna do? Hopefully it continues working out in our favor. Hopefully that dollar comes back down, or the correlations shift. The S&P 500 is not looking so hot at the moment. And there's some big icebergs at 41.14. The prices that we're at in the S&P 500 are still kind of crazy to think about, though. Okay, so here we're going to get the EIA numbers. So we'll watch oil here. Bring a chart over for a second. So it's a draw on the forecast. So that will tend to move the prices up, right? So there's seems to be that there are some buyers, but that the market makers are winning out here as the dollar pushes higher. And that may be because of the oil news being a draw. See, it's just I feel like when I'm in it, is this just me noticing, or does it have something more to do with the ones that why I decide to pick these ones or not? Seems like the ones that I get involved in, like they pull back so much, right? That just pulled back 4 basis points. That's so much. They might actually, it looks like they're actually coming back to where they started with the news, in fact. So, I mean, that really suggests that from a scalping perspective that I should have just, okay, I got it and gotten out. Of course, if the larger theory that I have ends up playing out, then you just keep it, but. Reset things. I should also say, not all. It's pulled back through all of this on not much volume. I mean, decent volume in the 30-year, about equal to the amount of buying, but in the others, no. It also looks like they're trying that they might be flipping into steepening again. Well, look at that. 3 ticks down in the 5-year. What's with that? It must be this dollar correlation. Yeah, I'm one of the things that I'm thinking about right now is like, well, I mean, we have moved a lot already this week. Hmm. And now I'm starting to hear stuff over the news squawk about UCB's lane, so. Why is the dollar? Not entirely sure. It seems like this latest leg higher did start when the oil report hit. Less inflation. Well, yeah, that's where it's been weird, because when we were having high inflation, the dollar got stronger, which was like, I don't think anybody would have guessed that one, but that's what happened. Does seem like it's the dollar that's hurting us the most right now, though. Maybe it's because of that oil report. I don't know. It hasn't really impacted oil all that much. They moved up like 20 cents and then came back. So maybe it's just the market maker trying to make things hard for me. It's all my fault. I'm sorry. If you're long treasuries and you're having a hard time, it's my fault. I'm sorry. Well, let's refresh Zero Hedge over here and see what they've got about ISM services. After ISM manufacturing tumble spooked markets yesterday along with the JOLTS data, all eyes were hopefully looking towards services surveys for some soft landing narrative reinforcement. S&P Global Services PMI disappointed, ISM services disappointed too. As macro surprise data has risen all year up until this week. So while PMI rose month over month, it fell intra-month and ISM was ugly, not good. As the following chart shows, ISM saw declines in both services and manufacturing, while S&P Global PMI saw both improve, though not as much as anticipated, right? Under the hood, on the services print, input costs rose at the second slowest pace since October 2020. Nevertheless, efforts to pass through higher costs to clients resulted in a steep and accelerated increase in selling prices. Okay, so a little bit of hint of stagflation in there, I guess. However, ISM data shows services prices at their lowest since July 2020 and new orders tumbled. Ooh. ISM chair Anthony Knives noted there's been a pullback in the rate of growth for services sector attributed mainly to a cooling off in the new orders growth rate, an employment environment that varies by industry, and continued improvements in capacity and logistics, a positive impact on supplier performance. Okay, so the supply side recovering. But there were plenty of negative comments from respondents too. Slowdown in the economy is leading to reduced expenditure amounts, still experiencing shortages in general labor positions amid demand for higher entry-level wages. Although patient volumes and revenues continue to be strong, labor and inflationary pressures have led to higher operating expenses exceeding revenues and resulting in negative operating margins. Our company continues to have a cautious approach to the future, continuing uncertainty regarding inflation and oil and gas regulations. There continues to be uncertainty in the market regarding future investments. Interest rate hikes seem to have done little to slow down consumer spending. The likelihood of a mild slowdown in the second half of 2023 or 24 is still pretty high. Layoffs will continue, says a professional from the scientific and technical services. There remains a notable divergence between manufacturing and services employment data from ISM, but March shows the latter catching down. CN Jones at S&P says business activity across the service sector expanded at a faster pace in March as a return to new order growth offered a tonic to the U.S. economy, which saw the fastest rise in the private sector output since last June. Greater services sector demand and increased pressure on capacity spurred another round of job creation, with the rate of employment growth quickening slightly to a 6-month high. Concerns regarding the impact of inflation and higher interest rates on consumer spending remained apparent. However, optimism at goods producers and service providers dipped since February amid elevated cost pressures. Nevertheless, selling price inflation accelerated again due to more accommodative demand conditions. A sharper rise in charges contrasted with the trend for input prices, which increased at the slowest pace since October 2020. Simply put, improvements in customer spending across the service economy counteracted another fall in manufacturing sales. The uptick was led by service providers as manufacturers recorded only a fractional increase in output. A further marked rise in input costs was reflected in faster increase in output charges. Okay, so it sounds like that services are moderating significantly, but that prices are still a concern over there. So I think that you would have to expect that because it was last month they were saying it was kind of hot. So I think that that's still all okay. But it also makes me think that next month that services will be in negative territory. Okay, well, we did dip all the way back to 16. We were able to come back up there pretty quickly. So, how long has it been? How long has it been since 8:20? 20 minutes? Okay, so if we get back through 22, it might not be too big of a lift for them to get back to 27. Especially if we get a real buyer here. And I mean, there is some buying. There has been about 5,000 net contracts buying from the low there. And this is happening with the dollar moderating and not actually pushing higher. So that's good, because that says to me that there are flows coming in and pushing the treasury despite the dollar not necessarily being very cooperative at the moment. I'm still very, very nervous. If I'm going to hold this all day through through work and everything, that's going to really mess with my head, man. Not willing to take it further though, are they? Actually, you know what? I'm just realizing that they're kind of pushing the short market maker stop out area at 21.5. So that might explain why they came back down through so aggressively. In other words, in order for them to push meaningfully higher, they might need to sit here for quite a while and trade a lot of volume and bring those market maker cost bases up. The S&P 500 dipping to new lows again. Looks like we're going to see 4,100 today. I suppose the downside hasn't gotten too dramatic over there yet, but if we cross 4,100, I wonder if there's any gamma switch over there that could flip things around on us. I haven't seen a report of that nature for a while at Zero Hedge, unfortunately. Apparently, the Democrat won in Chicago or whatever it was. Wow, it's almost time to end. Well, looking at this, like the dollar moving higher is not necessarily helping us, but it kind of is starting to look like a flight to safety trade. So at some point, I think that those correlations may shift a little bit. I was just thinking about when I look at the camera, you know, I wish that it didn't look like a camera. Maybe I should change that. I don't know. I have to think about that. I could move my prompt back over. I tried that one time and it didn't like it, but I could try that again. Still don't well, I mean, I understand the dollar moving big. I gotta tell you, Walter, the dollar can be a difficult one to understand, right? Both the direction that the dollar takes and the correlation that other assets get with it. There's very, very many times where it's perplexing, right? And usually what I'm doing is I'm looking at what is the tendency that it's had and today and just kind of go along with that. But you know, if we're going into a recession, a flight to the dollar makes sense, but an inverse correlation between the dollar and the treasury, I don't know if that makes much sense or not. I mean, the whole thing is that they're expecting euro rates to be higher. That should weaken the dollar. So why is the dollar getting stronger, right? It's got to be something else. It's got to be the flight to safety or something like that. Maybe you sit down and you say, yeah, well, like the dollar can go higher on a flight to safety, but actually you go and you buy Euro bonds and not US bonds or something like that. I'm liking the liquidity stacking behind us as we've come back up here, and it's been a decent. They're trudging back up. The volume's still coming in slowly and steadily. Especially since like 8:45. So we are in a period where we could be seeing a long meta order again. So that's good. I was just thinking, you know, I haven't seen anything from the Axia guys in a while. This would be a time where I would think he'd be saying something. Where the insight from the Europeans would maybe be valuable. If that's what they were really concerned about, is that the difference between Euro and US growth. What's Dalio? Trainees must be open-minded. The process requires them to suspend their egos while they discover what they are doing and what they are doing poorly, what they are doing well and what they are doing poorly, and decide what to do about it. The trainer must be open-minded as well, as it's best if at least 2 believable trainers work with each trainee in order to triangulate their views about what the trainee is like. Oh. This training is an apprenticeship relationship that occurs, and the trainer and trainee share experiences much like when a ski instructor skis alongside his student. Is that how it works? No, I haven't taken their order flow course. The process promotes growth, development, and transparency around where people stand, and they stand where they stand and what they can do about improving it. It hastens not just their own personal evolution, but the evolution of the organization. So I can tell you what you get in their order flow course is they basically they kind of like categorize the market into a couple of different types of market, which we talk about, but I don't like explicitly like have you memorize the list or anything like that. And then they say, when we're in this kind of a market environment, you want to look for this signal, and when you're in this kind of environment, you'll want to look for this signal. And I don't know if there's any empirical backing for that, but you know, it's probably it's a framework that makes sense. So from what I've seen from it, what other people have shown me, it looks like they have a decent education program. I don't think it's as good as mine, just because I'm adding some other information about order flow that is really important and empirically backed, right? That I think gives you more insight into the market. Is it worth what they're charging for it to you? Well, I guess a lot of that depends on how much money you have to spare, right? Their courses are very expensive. That's, you know, the whole conundrum, especially when you get into that space where you're talking about things where they're very expensive. You don't sell very many of them, but they're very expensive. You know, what actually is it worth? Well, that depends greatly on the person. Me, I'm glad that I bought a book and got the experience and learned it on my own. Maybe you've got the money and you don't feel the same. Oh, hey, no, that's actually not bad. I was just going about it, going, well, okay, they had a pretty, you know, after they came back up and it seemed really good, there was another little fall there, but they've come back up, and I think that they need to trade 23.5 next, but you know, it looks encouraging so far, and the cumulative delta continues to just march higher. So Sometimes I'll see things on Twitter that are like interesting to me, but it's like I hadn't heard anything about it. I probably shouldn't say anything. So I just go, okay, that's interesting. Don't know what to think about that one. Iceberg at 22.5. This is not the right context for a level break higher kind of a trade, but that's the setup. Especially if they just pull. Oh, yeah. Come on. Do it at 23. Have to. Come on. You're no fun. You're no fun, Zian. Just pull those 1700 and blast through there on 200 contracts. Nah. Too much. Too interested in trading back and forth at 23 instead. You want your fills? Okay. Fine. Be that way. Are the child orders in a meta order spaced out with even time intervals, or do they vary the entry times? I think that they are varied. I mean, I suppose it would depend on the algorithm, but the algorithm would probably be more effective if instead of saying, you know, every X seconds put an order into the market, it would say, okay, if the market does this, if the market pulls back or comes back and there's an offer that you can hit into, it's better for you to hit into that. And then if a certain amount of time goes by and that hasn't happened, and then you buy in, and you know, the volume should be random, right? Because for sure you don't want to tip the market off to what you're doing, right? So anything that you can do to kind of, you know, shake people off of the trail is going to be beneficial. In this situation, though, now granted, it seems like the meta order has kind of like evened out, but there was a pretty consistent meta order going from those lows. And it's just like, look at the chart there, right? The amount of change in delta each bar is pretty darn consistent. It does look though like they're kind of flattening out and not at the highs. So did not make it back as far as I would have liked, which means that this liquidity through this area is a little bit stronger than I was hoping. Well, it might not even be that. It might not even be that the liquidity is not as strong. The demand, the amount of activity in the treasury is just not as high. If we were really I mean, that's a pretty tepid amount. So it's good, but you know, that's pretty gentle. If the market was like getting really volatile and everything, and that probably would be better for us. I thought I saw something there on Twitter that I was like, oh, I should say something about that, but I don't see it now. So I think I was that I didn't actually see anything. Wow. US reaches 144 million settlement with Texas church shooting victims. 144 million. What did the government do? Have I not heard about this? Air Forceman. I think I vaguely remember this one. Kelly had used firearms he should not have been allowed to buy after admitting in a 2012 court-martial to domestic violence for striking his former wife and infant stepson. Man, you gotta be really bad. Like, you're really out of your mind when you're hurting an infant. Sometimes they cry and it really makes you want to pull your hair out, but like, I just can't ever imagine like actually striking an infant like that. Like, what the hell? Guy was crazy. 144 million. That's a big settlement. It looks like maybe the dollar's going to turn back down here. S&P, the decline has slowed down, but they're still heading down. And you know, they haven't quite made it to 4,100 yet, so I doubt that they're done. Some stacking at 23 and 23.5. We didn't get like the level break like badoosh that goes higher, but like they're putting the squeeze on it here. Do you think that people went short after that? Nah, that wouldn't. I don't know. There could be, you know, what could be happening though is there could still be some CTAs and so forth that are puking. That could be happening. I would hope if you were a CTA that you dumped whatever your positions were on Monday, right? But maybe they were hoping, but services might tell a different story, and so they were hoping for services to be different. That could have happened. All right, guys, we gotta go. Services PMI. Disappoint. I don't know how else to put it. I want to say something about how nervous I was when I hold it. Nervously holding through PMI for the win. No, I don't have enough characters for more than that. Express Scripts called me. That's not good. All right, guys, I gotta go. I will see you tomorrow. Hopefully this continues to do well. In the meantime, stay excellent.